it's Nathan Watt from Watson and Watt. Today's video is about superannuation and what happens if you don't pay it on time. So, quick video today. There's a few very important things that we need to go through about your super, because it actually costs you a lot more money than it needs to. So, what happens if you don't pay your super on time? Well, the first question is, what's on time? So super is due every 3 months. It's due by the 28th day after the end of a quarter. So it's a big mouthful, but in practical terms, April to June super is due by the 28th of July. July to September super is due by the 28th of October, and so on and so on. But it's not good enough to pay your super on the 28th of the month because it actually will be late. So the super clearing houses and things like that take time, take money out of your bank account, pay it to your super funds, they take time, and superannuation is not considered paid until it is received by the fund, the super fund. So if you press the buttons on the 28th of July for your June quarter super, it's already late. So you need to be paying it at least a week before then. So you need to be paying it about the 21st of each month to give that clearinghouse and give that time for the funds to receive it and put it into the employee's member account. So the next thing is, so we've got all that sorted. The next thing is, why is your superannuation late? It's usually a really big warning sign that either one, you've got poor processes around it, so you haven't got a system set up that reminds you or automates your superannuation payments, or you simply don't have the cash to pay it. The first one, if you don't have a system, that's pretty easily solved. We can set that up. It can be as simple as just putting in a calendar reminder in your diary every quarter or every month to pay your super. That's easy. The other one, if you don't have the cash to pay your super, that should have red lights and warning bells going off everywhere. Because if you don't have the cash to pay your employees superannuation, that means you don't have the cash to pay your employees. If you think of superannuation as your employees' pay, which it is, you're just putting that part of their pay into a separate bank account, which happens to be a super fund. If you had to pay your employees superannuation when you paid your payroll, you would be in trouble. So if you can't pay your super every 3 months or every month, you need to look at your business as to why that's happening, because it's a massive warning sign. It's not an additional tax. It's not an additional benefit for your employees. It's part of their salary package. So if you can't pay it, you need to be looking at why that is, and you need to rectify it really quickly, because super is one of those things that can get out of control really quick, and it can be a death spiral for a business. So big, massive warning there. If you can't pay your super due to cash flow issues, there is something inherently wrong with your business, and you need to sort it out, and you need to sort it out quick. Okay, so what happens if we don't pay super? For whatever reason, we've missed paying the super, we've paid it a bit late. What happens? Well, the first thing is you pay more income tax, and it's not that your income tax rate goes up or anything like that. It's just that you deny the tax deduction for the superannuation. So if you pay your June quarter super on the 29th of July, or whether you pay it on the 14th of October, it doesn't matter. For income tax purposes, it's late, so you denied the tax deduction. It's one of those things that your accountant does when they're doing your tax return, is go through your superannuation to see when you've paid it. It's only deductible for tax purposes when it's physically paid and received by the super fund. So if you pay it to the super fund and it bounces back because you got the wrong super fund details for an employee, that part is not tax deductible. So what does that mean in practice? Let's say you have $30,000 worth of superannuation to pay in a year, and you don't pay any of those on time. That's an additional 25% of tax. So it's $7,500 of tax, income tax you're going to pay more than you needed to because you didn't pay your super on time. That's insane. For the simple reason of you forgot to pay it, or you didn't set up a system to do it, and it's a couple of days late or a week late, you're going to pay more income tax. That's crazy. So if there's one thing I can stress on you, is that pay your super on time. It's the easiest way to minimize your tax bill. So we're denied the tax deduction. That sucks. What happens other than that? Well, you need to actually tell the tax office, the ATO. There's a form that we need to fill in. It's called a superannuation guarantee charge form. Big long mouthful. Basically, it's a form that says we didn't pay this employee super. You list out the employee, their tax file number, their superannuation fund. You have to put in there their total wages for that quarter, and you let them know, have you paid the super? So if you paid it late, you say, yeah, I've paid it, but I paid it late and I paid it on this day to this fund, and that's all cool. If you haven't paid it, it will then become a debt with the tax office, and you need to pay the tax office the money instead of the employee super fund. So you need to tell the ATO that you haven't paid the superannuation on time. Obviously, that puts up a little red flag at the ATO saying, this company, this business, either has a cash flow issue or has a process issue and they haven't paid their super on time, so let's watch them a bit closer, and rightfully so. So you've told them that you haven't paid it super on time. What then happens? On that same form, there's a calculation that needs to compensate the employee for the lost earnings on their super fund. So how do they do that? Well, they don't work out what the super fund earned and all that sort of stuff. They just say, well, let's use 10%, make it easy. So you have to pay 10% interest on the unpaid amount for the number of days that you haven't paid it. So if it's 2 days, that interest is going to be very small. If it's 2 years, that interest is going to start adding up. There's also penalties. So there's an administration fee on that for $20 per employee per quarter, which doesn't sound like a lot, but if you've got a lot of employees, you've got 100 employees, that's really going to quickly add up to be a lot of money. So interest and penalties, you need to tell the tax office. And when do you need to tell the tax office? Well, you need to tell the tax office on that SGC form within 1 month of it being late. If you don't do that, there's a whole bunch of issues. And that's that last point there is you can kiss your corporate veil goodbye. The point of the superannuation guarantee charge form is to say, look, we got it wrong, we didn't pay it on time, but we are going to sort it out. If you do not lodge that form on time, you are, as a director, personally liable for that superannuation automatically. There's no additional warnings, there's no additional forms to fill in, there's no letters that the ATO need to send you. You are automatically liable for that amount. So all the asset structuring in the world is not going to get you out of that. So you're a director, you haven't paid the superannuation, you are now personally liable for that super. If you're a sole trader or a partner in a partnership, you're already personally liable for it, so that's no issue. It's only if you've got a company there or a trust and you think, oh, I'm structuring my way out of this. No, you're not. Because superannuation is personal liability when it's unpaid and unreported, and the same as GST and pay-as-you-go withholding these days. So it's really important that if you can't pay your super, that you don't ignore it, that you don't just not pay it and don't tell anybody, because that is not going to solve the issue, and it's also going to make you personally liable. If you lodge the SGC form on time, there is a window, a small window of opportunity for you not to be personally liable under the director penalty notices automatically. So you have this small window to say, look, we can't pay it, the business can't pay it, we've lodged the form, we are now going to restructure or go into administration or whatever it is, or we're going to pay it on time, and you have an opportunity there to absolve yourself personally of those issues. So paying super late is a massive issue. It costs you more money because you lose the income tax deduction, you pay penalties and interest, you can be personally liable, which means you can lose your house, you can do all those sorts of things because you haven't paid your employee. They've worked for you, they've done the job, you agreed to hire them at that rate, including superannuation. They need to be paid. So if you can't pay your super, it's a real issue. So my advice is pay it monthly, set up a separate bank account, set up a process where you do pay it monthly. On the first or second of each month, you pay last month's super. If that's too far, pay it every payroll. Every time you do payroll, you pay the superannuation, you pay the pay-as-you-go withholding, and it's done. That way you ensure the tax deductions, you don't get in trouble with the tax office, and you won't get behind on your employee entitlements. So I'll stress one more time, if you cannot pay your superannuation because of cash flow issues, you need to fix your business and you need to seek help, and you need to seek it now, because I've seen it time and time again. One late super payment turns into 2 late super payments, turns into we don't pay our super, turns into massive issues, not only for you and your business, but also your employee, because that's their retirement fund. So if you can't pay it, you need to do something about it. The end.